So our next question comes from Gian. Gian says, "Hey, Rich Habits podcast team. First off, thank you for your amazing content. Your podcast has genuinely shifted the way I think. I'm 20 years old, currently in college studying business, but honestly, I've learned more practical and mindset shifting knowledge from your episodes than I have in any of my classes. Right now, I'm working at a shoe store while staying focused on building my financial foundation. I've saved up $8,500 so far and just recently began investing. I currently have $300 a month being split up between SPY, QQQ, and NVIDIA, most of it going into SPY and QQQ. But starting next month, I plan to consistently invest $350 to $400 per month into those three names. On top of school and work, I also run a side hustle where I resell clothes, shoes, and electronics. I know my numbers aren't huge yet, but I've been super disciplined and intentional about shifting away from that consumer mindset. I'm thinking long-term and building strong habits now to set myself up for the future. So here's my question. With $8,500 saved up right now, how would you suggest I allocate that money to maximize growth while staying smart about risk? What are other suggestions you might have for me as well as a young man entering this new stage of his life? Thanks again for all the value you share. Your podcast is part of the reason I'm thinking 10 years ahead instead of just 10 days. Let's go, Gian. What an awesome listener. Shout out to this incredible human being. That's so exciting. I would max out the Roth IRA as soon as you possibly can. If that means taking $7,000 of this $8,500 that you have saved up, dropping it into your Roth IRA, and maybe dollar cost averaging it all into the S&P 500, the NASDAQ 100, maybe even NVIDIA, right? That could be in there too. Maybe IBIT, right? Bitcoin, have some exposure to that. Having those 3 or 4 names in your Roth IRA and getting them invested within the next 3 months, depending on the size, you could put it all in on one day and just invest it and let it go. I'm not mad at that because you are going to have it for a very long time. Maybe you want to break it up into a couple weeks, a couple months. I'm not mad at it. But what's most important than trying to strategically, dollar cost average into the market any which way is that you are investing into the market, right? You're not overthinking it. You're not having analysis paralysis. You're getting your money invested. You're riding the wave, and that money will double every 7 years, assuming a 10% return in the markets, right? I know this sounds crazy, but because you are so young and the stock market grows exponentially, if you invested $8,500 today and it grew at 10% per year over the next however many, let's call it 50 years or so, your money would be worth just over $1 million adjusted for inflation. So that's how important it is to get invested as quickly as possible. Do not worry about the, I got to have all this money sitting in a savings account because I want to make sure that in case something happens. Savings is important. If you want to put 1,000 of this 8,500 in savings, get that $7,000 invested and growing for you at 20 years old. Your 65-year-old self will thank you so much.
I love this takeaway, and it reminds me of a story from my youth. When I was 21 years old, my 20-year-old girlfriend got hit by a motorcycle, and it didn't do a lot of damage. It broke her leg, and it was pretty tragic. But she received a check in the settlement of around $10,000. So at that time, even at only 21 years old, I had her go meet with Tim Croak, who now runs Croak Capital, and he talked to her, and he said, look, if you invest this $10,000 right now, get it out of your hands. She really wanted to buy this convertible, this Chrysler convertible. If he would have been able to talk her into doing that, she would have had over $1 million in retirement with that initial investment without adding any more money over 40 years of invested capital. But instead, she bought the convertible, and a few years later, that convertible was basically rendered useless, and she had some fun with it. And to this day, I spoke to her a few years ago. She never got to the $1 million mark in her investment portfolios. So it really illustrates time is on your side. Gian, you've already won the battle because you're thinking about investing and you're doing investments at 20 years old. A lot of people don't really start investing till 25, 35, or even 45 years old. So I love the fact that you're ahead of the game, you're thinking about how to do it, and you're following along with the Rich Habits podcast and the Rich Habits Network to get you ahead of the game and keep you ahead. So we really appreciate this question.